Hello everyone, I am coming to you today from my office because I am going to do my most requested video as far as the admin side of things goes, and that is how to do basic bookkeeping for a service-based business when you are a solopreneur. So this is not for people who are selling products. This is for people who are doing service-based sales. If you're selling products, you're going to need a different kind of accounting software. And if you are someone who has employees, this is also not going to work for you. This is just for solopreneur, service-based businesses. So let's hop right into the spreadsheet that I have for you guys. This is a free template that you can download in Google Sheets. So the link is the very first link in the description. So go ahead and download that now if you want to follow along, or you can just watch and you can pick it up in your own time. So first off, I'm going to show you really quick what this template looks like. So it might look a little overwhelming. Everything in gray, you do not need to worry about. All that stuff is going to auto-calculate for you. The only thing you need to worry about is this section in white. So what you're going to do here is you're going to track your income, your expenses. You're going to categorize them. These are all the major categories that like a CPA is going to want to see. So you're going to categorize your income and your expenses. And then you can leave any notes. So this is where you could even link to the receipts. Like if you're putting your receipts in Google Drive, you could link to the receipt, or you can just put like, this was an Amazon purchase, and you're gonna have the date in there. So you're gonna be able to link up your receipts. If for some reason you were to get audited, you don't necessarily have to keep track of all of it, because as a solo-based business, you're probably not gonna be doing an insane amount of transactions. So doing it this way should be fine for your purposes. So let me show you really quick how this works, and I'll explain to you some of the terminology that you need to know. So let's say I had a transaction. Somebody paid me for a service on the first of the year. They paid me $2,000. So I'm going to put it in my income category, and they are paying me let's say it was for a branding video. So I'm going to put that as an income. And down here, you can edit your types of income for your services. This is the only thing you are allowed to touch in the gray. You don't need to be touching anything else except for coming in here, double click, and you can put in your services. So let's say I do branding, I do weddings, and I do coaching. Those are my three main income categories. So I'm going to come in here and I'm going to make sure that the income category came up for branding, because that's what this person paid me for. And then I'm going to put a note in here, so-and-so's branding session. So that way I know, okay, that was the money from this person's session. I can like sync it up with my invoicing software if I wanted to. I know who sent me that money. So you'll see here, this number popped up into my gross income. So your gross income is all the money you make in the year without the expenses taken out. So if I go in here and I say on the second of the month, I needed to spend $300, and I spent that money on, let's say, equipment. On my total expenses, that money is going to count against my gross income and become my net income. So your net income is income minus expenses. And for the most part, your net income, this is your taxable income. There are a few exceptions to this, as you're gonna see over here in all these categories you can choose from. When you're paying for meals or entertainment, these categories are not 100% tax deductible by the government. So that's why we have to separate them out. And you'll also see here that as I'm selecting my categories, it's totaling up the money that I'm spending, and down here, the money that I'm bringing in into these categories. Your CPA and whoever's doing your taxes needs to know how much of your income was coming out of these categories, because they're not all taxed at the exact same rate. And it's also for your planning purposes. You're going to be able to see in your income, I made the most money this year doing branding, and maybe I didn't make as much doing coaching. So I want to revisit my sales process for this, or maybe it's a service I want to drop altogether. So again, you can come in here and customize these income categories, but that's the only thing I want you editing in the in this gray part. So I'm going to go ahead and put in some other transactions just for fun, so you can kind of see how this thing is working. So here's, let's say this was a wedding deposit for so-and-so's wedding. Whoop. I don't know how to spell that. Okay. So you'll see here too, it's totaling my gross income. My total expenses are staying in my expense category, and my net income went up because I haven't spent all that money quite yet. And my wedding income came over here. In the same day, I spent another $600 on equipment. And maybe that was like a tripod or something. So you'll see here my equipment category went up because it's tracking that income. It counted against my gross income as an expense, so my net income went down a little bit. The last thing I want to show you is draws, because this is important for you as a business owner. A draw is anytime you take money out of your account. So we're going to say on the 5th, you decided to pay yourself a bonus. Now, your owner draw comes out of this sheet as an expense, because the way that your owner draws are taxed when you are a sole member, LLC, or a sole proprietor, or you're in a partnership, it is not taxed doubly. So it's not taxed as income on the business than personal income. It's taxed one or the other. You're not getting double taxed on this. So it's important that you put it in as an expense. So we're going to say I wanted to pay myself. I have $1,600 available in my business. I want to pay myself $500. So I'm going to go in here. That's an expense from the business, and I'm going to put that in here as my owner draw. So it's money I'm paying myself. And then for my note, I'll just put like January draw. So you're going to see here, it came out of my net income because it's categorized as an expense. However, we are keeping track of it separately right here. This is important because your CPA and whoever is filing your taxes needs to know, all right, how much money did you take out of the business? Because that's also going to change your expenses a little bit. You're not going to get taxed on this because it's coming out of your net income, it's coming out of your taxable income, but it's going to be taxed differently because it's a draw. That is very important, so you don't get doubly taxed on this, because you don't want to do that. You don't want to give the government more money. So I'm going to keep going, show you a couple other transactions. We're going to make $300 on a coaching package. So this is so-and-so's coaching. Then we're going to spend $150 on Amazon on what? We'll do utilities. Well, no, Amazon doesn't do utilities. We'll do equipment again. Most of your expenses are probably going to be in the equipment category. So again, it's totaling all of these up here. And so what you're going to do is you don't necessarily have to come in and keep all of these expenses and your income tracked every single day. You could do this on a weekly basis. You could do it on a monthly basis. It just kind of depends on how much volume your business is doing. How much money are you bringing in and how often? How much money are you spending and how often? I personally keep my books like once a month. So I just go through and I read through every like income and expense statement on my credit card, on my bank account, and I go in and I make sure that I'm tracking all the money I made that month, what I made it from, because I do not have a CRM that tracks this for me. I do it myself. And then I'm also tracking my expenses. All right, so I spent money on Amazon. I buy a lot of my equipment on Amazon because it's easy. It just shows up at my house. And so Amazon keeps all my receipts in Amazon. So I just leave them in Amazon because I can go and download them anytime if I was to get audited. If for some reason I bought something from like a local camera shop, or I decided to go to Target for something, I would just take a picture of that physical receipt and put it in Google Drive. That's how I keep track of all this stuff, and I only do it once a month. But you have to track every single piece of income, all the money you make, whether it's cash or it's coming in through your bank account, and you have to track every expense. So all the money you're spending, you need to track all of that, because that stuff is tax deductible for the most part. The only things that aren't 100% tax deductible right now are meals and entertainments. Like if you're treating a client to coffee or taking them to dinner, taking them to the movies, that's not all 100% tax deductible. And that's why we're categorizing everything and we're splitting it out so that your CPA and whoever's filing your taxes can see. And that is all you need to know about basic bookkeeping. It is simply income versus expenses. And then all this other information, your tax professional is going to know what to do with it. Or if you're filing your own taxes on something like TurboTax, this is the language they're probably going to be using. So you're going to be able to look here and say like, okay, my gross income was this. My expenditures were this was my net income, these are my draws. And then when it asks you what categories you spent your money in, you have all that information right here. And for your own planning purposes, you're gonna have all of your different services down here, and you're gonna be able to see, all right, I made the most money doing this thing, I didn't make a lot of money doing that, what do I wanna adjust for the new year? I've also put down here things to know. So you can deduct payment processing fees as dues and fees. So let me show you one of the ways you would type that out. So let's say somebody pays you for a wedding. We're gonna put that in on the 8th because we're doing a lot of business in January. So someone pays you for, let's say a wedding. If you're like a graphic designer, it could be like a full website design, whatever. And they paid you $1,200. Your credit card processor took 3% of that. So $1,200 times 0.03. Your credit card processor took $36 from that, which means that fee that they charged you, that $36, is an expense that you paid to dues and fees. So you can come in here and put credit card processing fees. And there you have it. And then that means your income. And you're probably going to want to mention too, it's like so-and-so project. And then your income is going to be that $1,200 minus 36. So you only made $164 off of that project after that credit card processor took their part. That money is tax deductible. So you want to make sure that you're tracking that as an expense because you don't want to pay taxes on that money. So then this is going to be your income for, I'm going to put it in here as a wedding. You can put it in there as whatever service you were offering and whatever they paid you. And then you're going to say so-and-so project. And then you're going to know here, all right, these two transactions were related because it was for the same project. So that's how you would track credit card processing fees when they're charged to you. You can deduct your mileage at the current government rate for business travel under travel. So the way you would track that, is you're going to come in here and you're going to say, on this day I traveled. So you're going to get out your handy dandy calculator. I believe the current government rate is like 56 cents per mile. Not totally sure. But you can Google that. It changes every year. So make sure you're Googling it for your year. But for the sake of this example, we're going to work with like 36 cents a mile or 56 cents a mile. So we're going to say I drove 12 miles for my client. So you're going to put in 12 times 0.56. So my deduction for driving 12 miles on my vehicle, my mileage deduction is $6.72. So you're going to come in here, put that in as an expense, $6.72. You're going to come in here and you're going to say that was a travel fee. And you want to put in how many miles you traveled. 12 miles on car. I did 12 miles on my car. And if you're going to know that if you just put in miles, it's going to be on your car, you can just put in 12 miles. Something simple, make sure you're tracking how many miles you went. Because that is something, if you got audited, they might want a mileage count. So you want to track that here. If for some reason you needed it, you have all that information. That's how you track travel. But again, make sure you're looking up the current government rate because it does change every year. My next thing to know is not all expense categories are taxable or taxed at the same rate. So you're going to consult with your CPA when you're filing taxes, or your tax filing software that you're using is going to be able to tell you. But that's why we're categorizing our income and our expenses so that you know I spent this kind of money on these kind of transactions. So if you're asked and the government decides that that category isn't as taxable, you know how much money you spent in that category, so you're not committing tax fraud and you're not going to go to jail. Another thing to know is your state may require you to file monthly, quarterly, or just yearly taxes. You need to consult with a tax professional. Sometimes if they want you filing monthly, quarterly, or yearly taxes, it can depend on how much money you're making. So be sure to ask a tax professional that question because every state is different. And the last thing I want to tell you about is something called the cost of goods sold, which is basically when you're selling a product or you have to purchase something to be able to deliver it to the client. Your wholesale cost of that product is tax deductible. So I'm going to show you how to do that. This one goes for a lot of service-based businesses who have to purchase things to then resell. So let's say, for example, you're a creative business and you are a painter. And so somebody commissions you to do a painting for them. And let's say that painting is, we're gonna bring out a calculator again. You're gonna charge them $5,000 to do that painting. But the canvas that you need for that painting is huge. So that canvas is like $300, right? So you're gonna charge them for the $5,000 to do this commission painting. And you're gonna put it in here as your income category. You can come in here and put in like painting. So you're gonna charge them $5,000. However, you have to buy a $300 canvas to serve them. So you're gonna come in here and you're gonna put an expense as $300. And you're gonna come in here and you are gonna put this as the cost of goods sold. So this is basically like your wholesale price or the money you have to spend to be able to deliver this product. So you're gonna come in here and you're gonna say canvas for commissioned, I'm spelling this wrong, but that's okay. Canvas for the commissioned painting. This can also go for, let's say maybe you're a photographer and you do what's called in-person sales, which is where people are purchasing prints and canvases through you. So they spend $5,000 with you in their in-person sales session, but now you have to pay your printer $300 to print all these things to then deliver it to your client. That's a cost of goods sold. It's like your wholesale price. This is how you want to track this kind of stuff. You're going to use your the full income, but you're going to also track your expense of what you have to spend to make that service happen. That's your cost of goods sold. This is what you're going to use if you have to spend money to purchase physical things to deliver to a client. I hope that makes sense. But the way you track it, you have your income and you have your expense. So they're netting against each other here. So your expenses are coming out of your gross income, which makes it taxable net income. So you're getting that tax deduction for all these wholesale goods that you have to purchase to deliver to your clients. And that is pretty much all you need to know to be able to track your books for the year and give your CPA a really clean sheet with every category broken out. And I hope this was helpful, and I will see you in the next episode.